Good afternoon, everyone. Again, good afternoon, everyone. Thank you, Theodos, for a generous introduction. And I'm happy to be here. And today I will speak on behalf of farmers, for those decision makers who actually signed the check. So it's a good privilege. And also I want to congratulate the iCapital team for hosting this event consecutively for the 5th time. So my presentation today will focus on how can we provide access to finance to smallholder farmers in Ethiopia. So the content of the presentation will range from looking at from a bigger scope, relevance of agriculture to Ethiopia, to what type of mechanism do we have at hand to address the need of smallholder farmers. I'm sure most of you are very familiar with some of the statistics that fly over, for the last couple of years. But if you look at the contribution of agriculture to Ethiopia's GDP, it is somehow shrinking over time. A couple of years back, it was around 40, plus percent. But recently, the Planning Commission declared that the contribution of agriculture to Ethiopia's GDP is now to 32.5%. And this indicates somehow why the agriculture is declining so fast. Of course, we want the industry, the service sector to climb up, but that also tells us a story how we're not supporting agriculture in terms of the finance perspective. And when it comes to, the opportunity to export, job employment, agriculture always takes, the highest share. And when it comes to investment, the larger investment in agriculture comes from the public sector, especially by the Ministry of Agriculture. And a single commodity, that's fertilizer, takes the lion's share of the investment. Of course, we know that the final reach of this investment on fertilizer goes to the smallholder farmers, but it also tells that a larger portion of our money is invested only on the input side, but not on the value addition, including processing, marketing, warehousing, and the like. But when we see the characteristics of Ethiopian smallholder farmer or the Ethiopian agriculture, it is dominated by production constraint. All of you understand it is rain-fed and a very traditional practice, having 16.5 million smallholder farmer, which constitutes 85% of the population. We're not struggling not to feed the 15%, but sometimes also to feed the farmer themselves. And when it comes to investment, I'll explain later. If you look at the total portion of loan in the country, it's over 1 trillion birr, but agriculture is only consuming less than 3%. And I think the role of agriculture is somehow underrated when it comes to access to finance. But I think from our side, there is a better understanding. Commercial banks, they can't throw money simply to every farm because it's a shareholder money. But also, I think a due attention must be given also how to give a proper attention to the smallholder farmers in Ethiopia. And when it comes to, this digital payment, there is a low adoption rate when it comes to smallholder farmers in rural area. And also, there is an environmental constraint. If you look at the rural areas, climate change, flood, new disease type is also affecting the smallholder farmers' productivity. We're not in a stage where we say we don't need finance to improve productivity. If you look at the statistics across crop, we are one of the lowest producer when it comes to the productivity to multiple crop. If you take for example, wheat, we are a wheat importer, but one of also the largest producer in Africa. But our productivity is way beyond other sub-Saharan African countries. One of the reasons is the average landholding in Ethiopia is less than 1 hectare. And for this smallholder farmer, they don't have collateral to go to the bank or to the formal institutions and to access loan so that they can finance their input, their mechanization, and their farm production. So that finally is reflected here. While in the other parallel, we are investing a lot to import wheat and also other agricultural commodities. If you look at the current agricultural sector, in the bottom of the pyramid, we have millions of smallholder farmers with low productivity, and also their access to finance is also very low. And in the top of the pyramid, there are only few commercial farmers, especially who play the role after the production in the forward integration part, who have the leverage to access finance from financial institutions. I think the future should look like we have to somehow pull up a larger portion of our smallholder farmer by exposing them to access to finance. Of course, that require some regulatory framework change. And when we look other countries, they are doing very well in terms of access to finance after they followed this value chain approach to finance. Rather than focusing only the processing, it is better sometimes to move a little bit backward and start supporting smallholder farmer all the way from farm input, farm production, and also harvesting and processing. And the feasible option for a smallholder farmer on the ground are microfinance. But as you all know, microfinance, they don't have a capacity to support all the farmers on the ground. And there is also a growing practice that some of the commercial banks also work directly with the microfinance, but sometimes that also push the interest rate a little bit to be higher because the transaction cost for microfinance is a bit higher. And globally, there are not more than 50,000 SACCOs. And somehow 50% of them are found in Ethiopia. But they don't have a very strong management to somehow to go to commercial bank and then to convince for somehow to access to finance. And recently there is also a lease financing product for smallholder farmers, so that smallholder farmers can go to these lease companies and they can buy some agricultural machineries. A national warehouse receipt system is also one of the tools, which is currently growing as a practice, where farmers can take their commodity, store it, they can take a receipt, and they can be financed at 70% of the commodity value from some of the commercial banks. And I mentioned earlier, in 2029 and 21, if you look at the total loan disbursement, it's around 1.2 trillion, and it's only less than 3%. To be specific, 2.4% of this disbursement goes to the agriculture. And I can give you one practical example where we have more than 500 agro processors, and most of them are millers. And most of the commercial bankers or commercial banks have a confidence to provide loan for this big agro processor as a merchandise loan or as a project loan. But except farmer union, they don't have a direct source from smallholder farmer. Rather, they buy from a trader. So somehow the finance is now accumulated in the upper portion of the value chain. And there is a contract farming practice where we can somehow push agro processor to work directly with the smallholder farmer, and they can pre-finance some portion of the smallholder farmers a bit to ease a financing constraint. Quickly to see some of the barrier from a supply side, there are only few products, innovative products to reach out to the smallholder farmers, and commercial banks, sometimes they lack the appetite to somehow include a smallholder farmer, and we don't have somehow commercially viable insurance product. Our brother Munir have tried a lot in promoting insurance product in the agriculture sector, but I think a lot has to be done in order to provide insurance product to smallholder farmers. From a demand side also, there is a perception that agriculture is risky and the transaction cost is a bit higher with a low return. And from a policy perspective also, the financial sector is somehow closed for the internal player and no dedicated agriculture bank. Of course, we have one cooperative bank, but we need more of that. And at the same time, the agriculture sector should be promoted by government to promote more agricultural insurance. But we also see some positive enablers in the agriculture sector. The expansion of bank branch, of course, we understand that's from a competition perspective, and some microfinances are also expanding in rural area to reach more farmers. From a demand side, I mentioned that the agriculture investment is now nearly 1 billion. If you look at the demand, it is beyond $5 billion. So the supply is only 20% of the total demand. And also from policy perspective, there is a good approach coming from a government side. I'll end here. I think there are a number of modalities used by different countries, and we know that the burden is too much for commercial banks and microfinance. We somehow need to find a different approach where entrepreneurs should be supported not only by the bank, but a joint hand of foundations, NGOs, international aid agencies, research organizations, government, big corporations, and also incubators. So this is somehow, I'm sure we will have a chance to share some of our materials to you guys, so we can discuss this somehow later. And I think, let me stop here and maybe I will take questions later. Thank you.